Hi, everybody. Thanks for joining. Today, we're going to be talking about how to work a tax resolution case start to finish and how to structure your fees. But before we begin, I want to introduce myself. My name is Vinar Ayar. I'm a tax attorney and the founder of AR Law. My expertise is in favorably resolving federal and state tax problems. I know procedural rules inside out and how things actually work at the IRS. Feel free to call or email me anytime that you might have a question. I'm always happy to give fellow tax professionals advice free of charge. In fact, I even have a special hotline set up just for accountants and attorneys. Just call me anytime you have questions. The number's on your screen. So without further ado, we're going to move on to today's content. So now let's talk about how to work a tax resolution case and how to structure your fees. So this session is going to be broken down into 5 parts. First, we're going to go through a life cycle of a tax resolution case. Then we're going to talk about the steps and actually how to work a case start to finish and different correspondences you might send with your clients. Then we're going to go over how to structure your fees and talk briefly about ethics at the end. So the lifestyle of a tax resolution case is basically, here's the overview. First, the client will make initial contact with your firm. Then you'll have an initial intake. Then after that, you'll schedule them in for a consultation/strategy session. Most of the times at the consultation, you're going to be selling them or recommending an analysis for their case. This is not always the case, but in most cases, that is the next step. And then after you've done with the analysis, you bring them back, review the analysis, move on to the next phase of the case, which is going to be tax preparation. And then after the tax preparation phase is done, the final phase of the case is the resolution. That's basically the timeline, start to finish, of what happens when a contact reaches out to you. So the very first step in the process is a prospective client makes initial contact with your firm. So what do you do when that happens? The first and foremost, most important thing that you'd be surprised how many people miss is answer the phone. Do not ever let your phones go to voicemail. If a prospective client is searching for help with their tax problems and they call your firm and you don't answer, they're just going to hang up and call the next guy. Don't think they're going to leave you a message and wait for you to call them back. It does not work that way. If you don't have somebody full-time dedicated to answering the phones at your firm, then use an answering service. You should even use one after hours. There should be 24 hours a day where if somebody calls your firm, somebody needs to pick up, take down their information, and let them know that they've come to the right place and put them in touch with somebody who can answer their questions or promise to have somebody call them back, because that will stop them from calling the next guy. If you ask them to, they might wait for you to call them back. If somebody answers the phone and it's 10 p.m. and they happen to call, and you get the answering service trained to take down their message, give them reassurance, and promise to call them back, that'll stop them from moving down the list. Okay? If a lead comes in via website, make sure you call them immediately. This is kind of hard to do after hours, so sometimes you give a little leeway, but the rule of thumb is if you don't contact them within 1 hour, your chance of closing them ends up going down by something like 2/3. It is very important that you have a system set up where if a prospective client contacts you via internet, fills out a form on your website, if a referral is sent, somebody introduces you, make sure you respond right away. Okay, that is the first and most critical step in handling the intake process. Then, once you pick up the phone, you make contact with your client. You're going to get their basic information first, just in case you get disconnected, their name, phone number, email address, and how they heard about you. It's very important that you try to track your marketing sources and ask everybody who calls how they got your number. Once you've got them on the phone, then you will move on to initial screening. Now, if you're a relatively small practice, you're just starting out, the person who takes the call might also do the initial screening. In my practice, I have it separated where the receptionist takes the initial information and then they transfer it to a member of my intake team and they continue with the initial screening. You don't have to do it that way. There doesn't have to be a transfer. There doesn't have to be a split. The same person can do it all. But the idea of the initial screening is you want to find out what their problem is and take detailed and copious notes. Try to use a conversational approach. Make it sound like you're a real person. You're not reading from a script and have a list of questions. You should have a list of guidelines and there's some basic information you need to get from everybody. So there kind of is a list of questions you need to ask them, but you need to handle each conversation differently and treat them like real people. Always want to stay away from sounding too scripted. The goal of the initial screening is to find out if they qualify. If they do qualify, schedule an appointment. If they don't qualify, do not schedule an appointment. You'd probably waste your time. Of course, if a client insists, I'm always happy to help people. If they don't qualify, I'll give them free advice on the spot. If that's not good enough and they insist on coming in, I'll try to dissuade them. But anybody who wants to meet with me can. It's just, my practices. But as long as you're probably, going to be wasting your time. That's okay. It's never really wasting your time to help people. Now, what I mean by qualify is a lead qualifies if they fit whatever your criteria is, whatever your ideal client is. I'll tell you what's common in the industry. Not everybody follows this exact formula, but what's common is for a lead to qualify, they have to owe at least $10,000 to the IRS or to the state, or they have to have at least 3 years of returns that have not been filed. Now, in my firm, we don't really accept $10,000 cases. I'll give them free advice, even $15,000. We have the minimum at around $20,000 just because, I happen to be fortunate enough that we're busy and I can be choosy about who we take on. Anybody who owes less than that, I usually just give them free advice and tell them, what they need to do to handle their problem, or I'll take it for free or something like that. During the screening process, it is important that you maintain a friendly and reassuring tone. You have to build trust and give them peace of mind. It's called rapport in the sales process. Very early on in the conversation, you have to build rapport and you have to connect with them on a personal level and make them like you and put their trust in you and confide in you. An easy way to do that is to positively reassure them that they've come to the right place and that you're the right guy to help them. I try to ingrain that in all my intake people's minds. Let them tell you about their problem, and if they qualify, you say, oh, great, you've called the right place. This is exactly what we do here. Let me set you up with an appointment. So if they qualify, you set them up with an appointment, or sometimes if you're like a one-man shop or if it's a smaller case, you might try to just do the consultation over the phone. You never have to break it up into a separate appointment. In my firm, we usually set appointments for the consultations because the person holding the consultation should always be a licensed professional. I'm not a fan of firms who use settlement officers or salespeople or client managers to sell their services. I think a professional should sell their services. So if you're not the one doing the initial screening, then you shouldn't have them try to pitch the client on the first call. You schedule an appointment. If you happen to be the one doing the initial screening, a lot of people run one-man shops, and that's okay. You can just move on to the consultation phase of the conversation. You don't have to set an appointment for later. Now, best practices for initial intake, make sure you capture all the contact information for anyone who contacts you and the referral sources. This does not only apply to qualified leads. You should always capture information for anybody who takes their time to reach out to you and ask you for help or to send you a client. Those people should be added to your email list. You never know, they're obviously already a fan of you. They've taken the step to contact your firm. Even if they might not qualify, they might know somebody who does. They might have a referral in the future. It's important that you get in the business of aggregating data. You should always be looking for opportunities to capture somebody's contact information. You might use it, you might not. I do email newsletters. Not everybody does. you might decide to in the future, it's important to start building your list in the beginning. Okay. Also, you should have your intake procedures and systems thought out and in place. Every time a prospective client calls, the same thing should happen. They should go through the same process. You should have procedures. You should have scripts. Well, not scripts for the entire call, but like openings and best practices. You should have designated people who handle the new client calls, or whatever the case may be. Some people might not be big enough for that. Whatever you decide is the best way and how you want to handle new client calls, set up that structure in the beginning and make sure everybody in your office is trained and understands what needs to happen when a prospective client calls. Because if you're not closing new clients, then nobody has a job. So everybody needs to understand that they all need to get on the same page. Ultimately, everybody's responsible for intake and client communications and client experience, and you have to make sure that you make it clear to your staff what you expect to happen if a client calls. And then for people who you screen, sometimes you screen them and they qualify and you're like, oh, let me schedule an appointment. Like, well, I'm not ready for an appointment yet. I got to check with my spouse and, see their schedule, or whatever reason you're not able to contact them or you're not able to get them on the calendar. Make sure you follow up. Persistence is key. The follow-up, everything is in the follow-up. If you're not following up with your leads, you're going to be like half as successful. They say something like 80% of the people that end up hiring you don't do it on the first contact. Same with the appointment setting. Not everybody schedules an appointment on the first contact. You need to be persistent, but without being pushy or aggressive. And for clients who don't qualify, like I mentioned, just offer them free advice on the phone, answer their question. It doesn't take much to go out of your way to answer somebody's question. And you never know. I've had people call me with what I thought were simple solutions, simple situations, but in the client's mind, they got it built up in this big giant deal. And you say, well, it's not that hard. If you just make a couple phone calls and you dial this number and you tell them that, they'll release your garnishment, or you can get on a payment plan, or whatever the case is. Sometimes the case is just easy. You don't want to take it. And you'd be surprised at how much that might actually change somebody's life, because they've worked up this big giant problem in their mind. They have no idea what to do. A few minutes of your day could really drastically improve their situation. And then when you do give them free advice, always ask them for a review. That's how I've built up my reputation in my firm. I've got hundreds of online reviews. The vast majority of them aren't from paying clients. The paying clients are happy too, don't get me wrong. It's just that I get so many more calls, and a very small percentage of the people who call us end up hiring us. I try to convert free advice calls into reviews. I send them a request. I follow up with the request. I make sure to ask them several times and get them to leave me a Google review. And then you get something back, for the free advice, in case the satisfaction of helping somebody isn't enough on its own. So I highly recommend that part of your intake process, you built out an intake form, something for your person to fill out. Now, I use a CRM platform, a client relationship manager, where I build the forms out. Some of you might not be to that stage yet. You might not be big enough to need some of the tools I need, but you should have some kind of form, even if it's just a pen and paper or if it's a Word document with information. This is what mine looks like. I first get basic contact information up top, and the person on the phone taking the call will get this information in order: name, phone number, how'd you hear about us. And then I'll go into, well, tell me about your problem. I ask a very open-ended question, because usually when somebody contacts your office, they're anxious to say what they need to say. They need to get it off their chest. And the more questions you ask them, the more impatient they might get. So you need to just let them unload. So tell me, what are you calling us today? And hear out their problem. Make sure you get enough information to understand their situation and find out if they're qualified. You shouldn't leave it open-ended. You have to kind of control the conversation, cut them off where necessary. They tend to go off in tangents. You need to keep them on track while also letting them vent. It's kind of like a balancing act. Then you always, always, always ask them, are there any upcoming deadlines that you know about? Very important. And then I have in my office, I have them categorize the case type, but you don't have to do any of that. your intake form can end right there. Just tell me about your problem. They take the notes, they get the contact information. But I like to try to categorize the cases so we have an idea on a quick glance if it's unpaid taxes or unfiled returns or foreign bank accounts or audit defense. There's a number of different services. And then I have an outcome information. Did you schedule an appointment, yes or no? Did you transfer it for free advice on the spot? Was it a non-qualified lead? I like to know every time what was the quote-unquote disposition of the call. What happened? At the end of the call, I put that in my form, and I capture this information is the first thing that I capture every time somebody calls their office and identifies themselves as somebody who feels like they need our help. Then, after you go through the initial intake, let's assume they qualify, and let's assume that you scheduled a consultation. Or if you're going to move on with the consultation at the spot, before the consultation, I like to email them the client information sheet ahead of time. What the client information sheet is basically more detailed personal information about the client, street address, social security number, date of birth, basically the information that you will need to fill out a power of attorney if they like to hire you. I like to have the powers of attorney pre-done when they come in. So when I'm ready to pitch them a price or I'm ready to quote them a fee and ask them to sign up, all the paperwork's ready. Now, not everybody's comfortable with giving you your social security number just yet. It's okay. You don't have to press the issue. Just explain that it might save a little bit of time, but if they prefer not to, it's okay. You get everything done, get the POA ready, review the initial intake sheet, make sure you have all your information prior to the appointment. If they have not filled out the information sheet prior to the appointment, then you have them do it, when they come in, but before meeting with you, or if you're doing phone conferences, which seem to be the norm these days, is you have somebody call them, right before their phone conference, capture the information before the consultation begins, okay, and ask them for documentation ahead of time. Tell if they have any notices or if they have anything that they think that you need to see, invite them to send it. They can bring it to the appointment if it's an in-person appointment, but if it's a phone conference or like a Zoom appointment, they have to send it ahead of time so that you can review whatever it is they want you to look at and talk to them about it. So this is an example of my client information sheet. It's real basic. I got 3 boxes: client information, spouse information, company information. Those are the different entities or organizations you might have to fill out a power of attorney for in any given case. So I just get all that ahead of time. So then when you get their information, then you move on to the initial consultation. And for those of you who saw my session on how to do an analysis, we talked about some of this already about the initial consultation, but for a refresher, or for those of you who have not seen that segment, the purpose of the initial consultation is for you to meet with the client and talk to them about their tax problem. It's very much a fact-finding mission. You want to find out as much as you can about their problem so that you can come up with a solution. At least that's the first part of the initial consultation. By far, the most important question you need to ask them is you have to find out what motivated them to come in. What is the problem they're trying to solve? What is it you're hoping I can do for you, is how I usually phrase it. Or what is it that you want me to help you with? What is it, if I can wave my magic wand, what would you want me to do? Okay, but keep in mind that the initial consultation is a sales meeting. The reason that the client is there is so that you can sell them. If they qualify, you can pitch them a price. Don't make sales a dirty word. There's nothing wrong with being upfront about what your motivations are and what you're doing, because there's a right and a wrong way to sell people. And if you're selling people the right way, then you're selling them what they need, and selling is equal to helping. They're not, diametrically opposed. You can be a salesperson and also be helpful. So I'm never, shy about the fact that, I bring you in for initial consultation so I can pitch you. So if they qualify, always make sure they leave with a quote or a proposal and offer to hire you. Let them know what the next step is. Never say, well, let me look at this more and get back to you with a price. Don't do it that way. Get them in. Find out what it is their solution, what it is their problem is. Find out what it is they're hoping to accomplish. See if it's something that you can do, and then make them a proposal. Okay? You should propose them. If you're not sure what you should charge them, then you should propose an hourly or a contingent based fee or something that's more open ended. Or most of the times you'll be pitching them or recommending an analysis, which you should have a flat fee for. It's an easy, soft opening. Well, I got to look into this more. I really can't make a recommendation for you until we've had an opportunity to review your transcripts and really analyze your situation. So the next step is you should sign up for an analysis. I might have no idea what I'm going to do in the case because, I don't have the necessary information yet, but I have something to pitch the client, some kind of proposal to make them. Always make sure you do that during a consultation. You're also going to look at it as an opportunity to employ secondary screening and dispose of free advice calls. Just because people meet your basic qualification guidelines, after you talk about them some more, talk to them some more and learn more about their problem, it might be simple or it might be something that's just not something you can help with, or, you might not be able to take it for whatever reason. So, you should get rid of the people who are free advice, but make sure you offer them help where you can. Give them whatever advice you can, and then like you do with the initial calls, ask them for a review if it's appropriate. You get rid of them. The ones who qualify, you need to give them a pitch, and the reason I like to have the POA done up front is because I'll give them a pitch and say, here's all the paperwork. It takes about 2 minutes to do a fee agreement. We can get you signed up before you leave, or we can do it before you hang up, or, if you're doing it over the phone, or give them something to leave with that they can look at and hold, even if it's just a power of attorney. So during the consultation, based on the answers to their questions, based on what you learn about their case, you need to formulate a game plan and a recommendation. And like I mentioned, oftentimes the game plan, the recommendation, aka the pitch, is going to be, the first step is an analysis. If you guys haven't watched my analysis session, I highly recommend you do it because I'll go into more details there, what it's about, and how to sell them and how to do them. So you'll pitch them an analysis. An analysis is not right for every client. If it's like an audit case, or if it's a revenue officer defense, or if it's something urgent that you need to get started right away, you don't really have the luxury of selling them an analysis and bringing them back in 3 weeks and then making a further recommendation. Then you might want to skip and just go, to an hourly based engagement. Your game plan might look different. Also, if you have the time, I usually do what I call a mini financial during the initial consult. Try to get an understanding of how collectible your client is, because that'll help you a lot in formulating a game plan. Okay, so always make sure you're friendly. Always be confident when you speak to somebody. It's okay to not know, the answer to everything. You shouldn't just make stuff up. But there's a difference between you can confidently tell somebody you don't know something. Okay, people can see right through it if you're, just trying to sound fancy and you try to talk things up to sound like you know what you're talking about. If you don't know something, just tell them you don't know and that you can look into it and get back to them. That's not a lack of confidence. That is, the opposite. A confident person is not afraid to admit that they don't know something. Make sure you listen. People are looking to your listening skills. The better you are at listening and they understand of hearing out their problem, then the more that they're going to connect, the more rapport that you're going to get. Acknowledge their reservations or objections. Take detailed notes. It shows you're listening. And also, I like to sell in the a la carte pitch. I take the 3-step approach. The way I lay out a case when somebody's talking to me, if it's a resolution case, somebody who hasn't filed, hasn't paid, can't afford to pay them back, they don't really know what's going on. I'll tell them, there's 3 steps to every case. The first step is an analysis / collection hold. We'll look into your situation, figure out what's going on. We'll also take necessary steps to stop them from collecting in the near future. And then the second step is tax preparation for those who are necessary. The third step is a resolution. That would be like the offer and compromise with the innocent spouse for the installment agreement or whatever you're doing for them. And I always pitch them and I always, stress heavily the importance of the analysis and the value. I tell them, you can just do 1 step at a time. You don't have to come to me for everything. Some firms require their clients to do the tax prep with them. I don't. I just tell them, look, I'll do the analysis for $1,000 or $1,500. I'll look into everything. I'll give you a game plan. No obligation to do anything else with me from there. I'll tell you what you need to do. I'll quote you a price then. And I try to stress that it's not all one, that they can take them, one at a time. And sometimes though, you can just, if it's a simple enough case or if it's small numbers, you can just quote a flat fee and give them, a start to finish or an hourly retainer or even contingent fee where appropriate. So doing the analysis, a quick reminder, there's 4 parts. You do the initial consultation, then you do the financial analysis, where you get an idea of their collectability. Those are oftentimes done together. And then you do the transcript, download all the transcripts, you do a compliance check, you review their situation, come up with a recommendation, and then you bring them back to go over it and make your recommendation. I'm not going to say any more about that. For more details, you just check out the analysis presentation that I have. Then, if it's necessary, the next step after you do the analysis, a lot of people are behind on their taxes, is you have to do tax prep. For a lot of resolutions, it's required that the client has to be current on their tax returns before you can get an offer and compromise, before you can get an installment agreement. So I always say step 2 is to do the compliance tax prep. Some people combine step 2 and 3. They sell them as a 2-step approach. First you do the analysis, and then you do the resolution, and the tax prep is included in the resolution. It's to each their own, as far as I'm concerned, however you're comfortable. Now, not all of you might actually do tax returns, so you don't actually have to do the returns in-house. If you don't prepare taxes, just make sure to partner with a preparer in advance to send your clients to who can do the returns and turn them around for you quickly. You would just do the compliance check, you do the analysis, you'd get all the transcripts necessary and recommend what needs to be filed, and then you would connect your clients with the outsourced tax preparer. Then once the returns are done, or if they're not necessary, then you go to step 3, which is the resolution. Okay, that's the final phase of the case. That's where you make a recommendation, tell them what it is you hope to accomplish for them, and you quote them a fee to set that out. Again, sometimes you can skip step 1 and 2. You can just go right into a resolution. For audit cases, penalty abatement, simple cases, revenue officers, I like to just go right into an hourly fee or into a contingent fee. Sometimes for really big cases, or for really small cases, I'll go right into a flat fee and quote them a start to finish cost on the case. You don't always have to break it up into the 3 steps. You can start, but most of the times, probably 80% of our cases, we sell them in phases this way. So that brings us to our first polling question. Okay, so now we're going to talk about what to do after a client actually signs up. So you've met with them, you've done the consultation, you've made the pitch, and they said yes. So what's the next step? First, you get all the signatures for the required 2848 power of attorney, have them sign a fee agreement, and make sure that they complete a payment authorization, make their payment up front, or schedule future payments. I don't require people to pay their entire fee up front. They don't always have the means, especially when you get onto the resolution phase of the case. But what I do is anybody who does not pay up front, I require them to set up automated recurring payments where, I just charge their card or take the money out of their bank at agreed upon intervals. Make sure that, they've made arrangements to pay their fee before you start working on the case. Get the relevant documents and information from the client, especially contact information for their IRS or state agent if they haven't, any recent notices or letters. If they're under audit, you'll get the information document request. Any outstanding requests, anything that the client has. A lot of times they don't really have anything, and that's okay too, because eventually you'll get the transcripts. But get what they have up front as far as documents and information. This is what a power of attorney form looks like. Basically, it's got several sections. Up top, you'd have the taxpayer's information. Then in the middle, you have the representative's information. Then at the bottom of the first page, you're going to have information about which periods you're authorized to talk about and what you're authorized to do for them. And then on the next page is the signatures where the client signs and then the representative sign. One thing I want to point out is if you see that little box in red on the first page where it talks about the CAF number, CAF, don't worry if you don't have a CAF number. What that is, it's a unique identifying number for each power of attorney. When you do your first power of attorney, when you get your first client hire you, you can just leave the CAF number blank, and the IRS will just automatically assign one to you and send it to you in the mail. So in your fee agreements, what you should include, some of this stuff is pretty basic. Obviously, the name of the client, conditions of the agreement, scope of services, client's duties. This is very important. You have to put a clause in there that tells you, the client, what you expect to them. They need to be timely. They need to respond to you, provide you with information necessary, pay their bill, so on and so forth. Any specific fees and charges that they could be incurred later. A payment schedule. I work, when people are paying in payments, I put that right in the fee. You're going to pay $5,000 in equal monthly installments of $500 each, or whatever the schedule you guys agree on. Put it right in the agreement, so that way you have something to reference back to. Then always make sure you put some language in there to protect yourself. No guarantees on results. You should reserve the right to discharge the client or withdraw from the case if they're not cooperating or following the terms of the agreement, and so on and so forth. This is what my fee agreement looks like. This is specifically the hourly fee agreement. Notice it's only 2 pages. I pack a lot of information in there in the 2 pages, but I'm not a fan of making overly long fee agreements. I've seen some firms that have 5 or 6 page agreements. It's just not my style. I like to keep it simple and short. This is an hourly based fee. Notice there's blanks where you put the client's name, you put the matter's name. I even, put the initial fee blank. I calling your attention to paragraph number 5. That's for the hourly rate. I leave that blank because I raise it from time to time. Usually my rate is raised every year or every year and a half. And, I have my fee agreement template set up, so it's easy for me to just go in and change it for the future ones. Another thing is, something that I've started doing recently is that I used to have different hourly rates for different members of my staff. I'm kind of moving away from that. I recommend that if you are going to work on an hourly basis, most resolution cases and most of your cases should be flat fee. You'll make more money than an hourly fee. But sometimes you just don't know how much work's involved and you want to do an hourly rate. I recommend a blended rate. Just charge the same amount for everybody in your office. You can, basically charge more that way and get a better result, because the way I view it is if you get more efficient and you get highly trained staff and they're able to do the work of an attorney, why should it cost less? If I'm producing the same work product, whether an attorney does it or a highly trained paralegal does it, well, I'm going to bill the paralegal for the same fee because it's going to be the same work product and it's the same thing that you're delivering to the client. There's really no reason why you should have a different rate for different members of the staff, at least in my opinion. This is what my payment authorization forms look like. Nothing earth-shattering. I got one for credit card payments, one for ACH payments. I'm a big fan of ACH payments. It takes with credit cards, you get paid the next day, but they charge a fee, usually between 2% and 3%, depending on who's processing your credit card payments. With ACH payment, you don't get paid for a week, but the fee is usually fixed at 50 cents. So it usually works out a lot cheaper if you can work out something where you can just draw money right out of the client's accounts. I always try to urge clients to go that route rather than put things on a credit card. One thing I'm not a fan of is I'm not a fan of charging an extra fee for people who use credit cards. I just feel like as a consumer, I don't appreciate that. It's not the image I like to portray. So, I don't charge them anything. If they put it on a card, that's fine. I'll eat the 3%. Your margin should be high enough that it doesn't matter that much, in the end. So some best practices with your fee agreement. Make sure you're as specific as possible as far as what you're going to do in the scope of services, especially with flat fee and contingent cases. Because you never want to write an open-ended flat fee agreement that a client might interpret that you're obligated to do more work than they paid you for. If you're going to have an open-ended agreement and it's hard for you to describe what it is you're going to do for the client, that's a good indication that you should probably be charging by the hour, because it might not be defined enough. You always have to define your scope of services or charge by the hour. I don't care if my scope of services is is overly broad so much. If I'm getting paid for the work I'm doing anyway, it's more important on a flat fee. Also, you should not begin working on the case until the agreement's been signed and the payment arrangements have been made. Not everybody pays anything up front. Sometimes I let people start with no money down, but I always make sure they sign an authorization that authorizes me to take a payment at some date in the future. Again, if they're not willing to pay in full up front, require that they allow you to set up automated monthly payments and just take the money out of their credit card or out of their bank account. Otherwise, these people are having money problems already. You're going to have a hard time getting paid if you don't just automate the process, and you'll be constantly chasing your clients to make their payments. So before you take your first case, make sure that you have internal controls and systems in place. There should be a process everybody follows. Just like we do with the intake, everybody should have a defined process. When you sign up a case, everybody should have a defined process. It doesn't need to be that detailed in the beginning. You just need to have best practices and how you do things in your firm and how things should be done. I have a recommendation for you guys in a minute. Determine how you want to set up your client files and make sure that you just have a model of how you work your case. So setting up how your clients files, we used to use physical files in my office, like the press board files and folders, and you put paper in there. We've now finally officially scanned our last document and moved entirely to digital and paperless file. However you do is a matter of preference. Some people are old school, they like paper. Whatever it is, just have a set system and a set organization. Your file should include every piece of documentation you receive, all of your work product, everything related to the case should be contained in the one file or two. You could have a physical and a digital file. It doesn't have to be one or the other. And you should have specific folders or sections depending on what type of documentation. Like when we used to have pressboard files, I used to have like the 6-part ones where there was different tabs, and I had the inside tab had the power of attorney and the client information sheet. And then I had notes on the next tab, and then I had notices, and I used to designate different sections. It's important, especially when you start to get more and more cases, if you don't keep your files organized, you're going to spend a lot more time than you need to working on them. So what belongs in the file, again, all the stuff that you get in the case basically it's hard to itemize it, but there's an itemized list. With the physical files, again, I like the pressboard file folders, digital files. I designate a folder on the computer. We use cloud storage now. We use a service called Box.com, where all of our clients are in one folder, and every client has their own subfolder. And within the client folder, there's another one for each matter. Every time they sign a fee agreement or every different phase of the case should be a different matter. And I have a different folder, and I keep all my files as organized as possible, especially when you start to grow. You start to have more than one person work on the files, or sometimes you have employee turnover. If you're not organized, you have a hard time figuring out what somebody else did. So here's an example of how we organize our clients' digital files. So like within a client matter folder, you see that there's many subfolders. Notices we get, analysis reports, IRS transcripts, correspondence, documents we draft, research, whatever. I keep it organized and try to keep matter. But you can't go overboard, because if you organize everything too much and you drill down too much, then it ends up being useless too. So you got to kind of find the balance. Whatever works for you. Everybody has a different preference and a different recommendation or a different personality. So again, we talked about all of these already. Make sure you have a detailed procedure. One thing that I learned over the years is it's very, very, very important that you guys keep a detailed record of all the mail that comes in and out of your office. Notices that come in, you should have best practices for organizing them, getting them into the file, notating them into your system if you have one. For mail that goes out, the outer envelope of every mail piece is always scanned in the computer, as are the contents. If it's certified, I'll scan proof of mailing. The outer envelope gets scanned after the postage is on and everything, and I save everything in the file nice and organized. You never know when you're going to have to later go back and prove that you actually mailed something. Okay? Again, it's important to set up your internal controls and systems. What I mean by that is a way to monitor your cases and keep track of your tasks in your calendar. And to, most importantly, make sure that no clients fall through the crack and nobody ever gets forgotten about. You don't need anything fancy when you're starting up. We have law practice management software that keeps track of our clients. You guys might have something similar, or an accounting practice management software. It's fine, or you might not. That's fine too. You can just have, Outlook tasks and use the Microsoft programs or the Google programs or whatever. And, any kind of system, any kind of way that you have to keep track of things. Could be spreadsheets. Like I said, we use Microsoft Office tools. We also have 2 different CRMs. One of them is just for potential new clients. It's called Lawmatics. It handles the sales cycle of the case. When I showed you those forms earlier, those were from Lawmatics. And then once a client hires, we use another platform currently called Practice Panther, and that's our law practice management program. And all the retained clients and all the matters go into there, and we use it to keep track of things. And like I mentioned, we use for our file storage, we use Box.com. You don't have to have cloud file storage, but that seems to be the direction things are going in. I recommend it. It makes it easier. We use Box simply because it integrates well with Practice Panther. Dropbox is the same. There's also a Microsoft one. There's a whole bunch of different options for all of these tools. I'm just telling you what I use. I'm not necessarily recommending any of them. So the system I recommend for controlling, especially when you're first starting out, is what I call the task system. It's very simple. Every rule, every case needs to have an open task. You should have a task list. It doesn't have to be something fancy in your software. It could just be on Microsoft Outlook or in your Gmail or whatever. And you make sure that you have at least one outstanding task for every open case. If all of your tasks on a case are complete, then that means the case is closed. Now, so like a task could be something simple, or you have a broader one. Like if a client comes in and they hire you for an offer and compromise, you might have a task that says submit offer and compromise, and you just set some due date, some target date, maybe a month out. And every month, this client will come back, after 1 month, the client will come back to the top of your task list. Today, your offer and compromise is due. And if it's not ready, push out the deadline another week, or push it out another month, or push it out, whatever is appropriate, whatever you find necessary for the circumstance. But the idea is you always, for every single one of your case, will make their way up to the top of your task list. You'll never forget about anybody as long as you have at least one task for every single case. And every day when you come in, you just attack your task list. You work down the list. And as the tasks come due, it makes its way up to the top of the list. And if you always check your cases, and you should, as a double check and as a backstop periodically, you should work down the list of every one of your clients. Review their file, make sure the tasks are set up, make sure you're not dropping anybody, and then if everybody has a task, then they're guaranteed to periodically come onto your radar. And that is the simplest and most effective system I've found in my practice to be able to scale. Make sure they all have tasks, and then every couple weeks, go through the entire list, or every month you go through the entire list or subsections of the list and double check to make sure everything's in there and everybody has a task and people are doing it. Use it for keeping track of your deadlines, appointments with the IRS, follow up with steps in your case. Like, for example, if I have an offer client, I might have the first task, collect all the financial information. And then every time I do something on that task, I'll take the notes. I'll say, on this day, I called the client and requested their bank statements. On that day, I called them again. I received the bank statements. I'm asking for utility bills. Always document your deadlines. Set the deadlines short. Make them target goals, not deadlines, because you can always push them back, and you just want to keep that coming up to your top of the list. After you get the documents, then the next step is to assemble the offer and compromise. So your first task will gather documents for offer. And once you have everything, you complete that one, open a new one, compile offer and compromise, or send offer and compromise. And then once it's sent, you have a new one, watch for response for offer and compromise. The deadline on that might be like 6 months out or 8 months out, because that's how long it takes to hear back on an offer and compromise. So even if you don't have anything to do, like the task could just be watch for IRS notice. That's fine. As long as you know where you're at, you're waiting for the IRS and you're waiting for something to come in, and periodically it makes its way up to your to-do list and to your top of your mind, and you're checking in on things. Nobody will ever get forgot about. Just make sure that, because sometimes you might be working on something for 2 or 3 years. If you don't have a system in place and you're not expecting any response for 8 or 9 months, it's easy to otherwise forget about people. So we're going to move on to our next polling question. So now we're going to talk about best practices for handling correspondences in your practice. First and foremost, when it comes to corresponding with the IRS, make sure that you save and document all phone calls, mailings, and faxes from the IRS. When you're sending out physical mailings, like I said, scan and save proof of mailing, the outer envelope with the postage to the client's files. Anytime you send something out by fax, you guys might not be used to using faxes. It's kind of old technology, but the IRS is still all about faxes. So, blow the dust off your fax machine or sign up for an e-fax service, because get ready to start sending lots and lots of things to the IRS by fax, or they'll send you stuff by fax. Make sure you save the confirmations. Now, sometimes it gets to be tedious. Like I have, my receptionist spends probably 3 hours a day simply scanning and organizing letters that come in the mail. 2 to 3 hours, because as you grow and as your client base grows, you start to get lots and lots of IRS notices, and it's easy to kind of get lazy and just kind of look at them and react to the ones that you find important. But it's very important that you set up a system where every notice that comes in gets noted in the client's file, and it's called to the attention of somebody who has expertise in your firm. It could be, when I started, we used to just take the notices and distribute them among the people in the office based on who the client's assigned to, and then the attorney or the professional will open the notice, look at each one, take the note in the file. Now, as I've grown, I've kind of got a more sophisticated system where the letters come in. Sometimes we'll receive hundreds of letters in a day, and the receptionist will open each one, find the client, note the file. We have a category. I have a list of the notices that are the most important. And for the ones that are the most important, she will email them to the attorney immediately to call their attention to them. For the ones that are less important, she'll just note that we received it and save a copy of it to the file. Okay, that way you can have a log of everything that comes in and you don't kind of forget about people. Now, when it comes to corresponding with the client, it's very important that you keep the clients informed and updated. A mistake I used to make early on in my practice is that I'd be waiting, I'll send out an offer and compromise, and I'll be waiting for 8 or 9 months for a response. And in that 8 or 9 months, I won't even contact the client one time. And I actually started to get complaints. I would win a case. I would call clients, hey, congratulations. Your offer got accepted. We settled your debt. And they would yell at me, oh, where you been? You forgot about me all these months. What have you been doing? And, not realizing that while I, as the professional, know that it's normal not to hear anything for 8 or 9 months, meanwhile, the clients are just, working themselves up into a frenzy, thinking that you took their money and didn't do anything for them. And some of them they don't call and ask questions. People aren't always as forward and transparent as you'd like. So what I found is that the best practice is make sure that at least once a month you contact every one of your clients. We send a monthly update letter for every one of our clients to let them know this is where we stand with your case and this is what's going on. Even if the letter is the same 9 times in a row, we're waiting for the IRS, we're waiting for the IRS, we're waiting for the IRS. It's okay. At least they know that you haven't forgotten about them. It's very important. The client's biggest complaint I've seen when people are coming over from different firms or when clients complaining about their accountant is, well, they never respond to me. They don't stay in touch with me. I don't hear from them often enough. It's not all about the results. You can get a phenomenal result for the client and then have them still be unhappy just because they feel like you didn't coddle them enough or you didn't keep in touch enough. Trust me, it's happened to me. I've had people actually leave me bad reviews where I've won their case. They leave me a bad review. Well, he won my case, but I really wish he would have called more. 2 stars. And it's like, I used to feel like I was entitled to a good review. If I, now I'm not so, you know, I understand where they're coming from. It's important, as important as the results is the way you make them feel and the way you handle them, and make sure that they understand that you appreciate their business and that they're important to you. And a big part of that is just stay in touch, and that really goes a long way. Always record everything. I mean, not like actually record, but document everything that happens. If you make a phone call, or if you email, or if you have a meeting, there should be evidence that happened in the file. And then you should mix up your correspondences, calls and emails, and physical letters whenever necessary. Now, when it comes to requesting information and or documentation from your clients, you guys will see that the most challenging part of this business is getting the clients to give you the information you need. By nature, people who are behind with the IRS, who haven't done their taxes in years, are not always the most organized people. They're not always the most responsive people. You have to take it upon yourself to make sure that you make the effort to get the information from them. Okay? So when it comes to requesting information, always set a task to get the information so that it keeps coming up to the top of your priority list. Don't just send out the request and wait. Use a combination of phone calls and emails and letters, and have a system in place for requesting information. I have a series of correspondences and letters. Now, my series of letters is not the only request. I don't limit it. We'll call somebody 30 or 40 times sometimes before they finally give us what we want. And that is, one of the things that is required of you. It's kind of tedious. You feel like, sometimes you have to baby your clients and you have to call them every week, and you're like, well, they should care more. They should care enough to give me the information. Well, you have to do everything in your power to help them, even if that means bothering the hell out of them to give you the information that they want. Now, in addition to the phone calls and the emails and the text messages that I send clients asking for information, I have a series of letters, especially for offers and when I'm requesting financial letters. The first is the initial ask, where I have a list. Here's everything you need to get from me. Here's your checklist. Please get it. And then I'll send out a reminder letter. Then if I still don't get the information, I'll send out a warning letter. It says, hey, we've been contacting you. We've been calling, emailing, texting. I've sent you letters. I still don't have the information. If you don't get it to us, we're going to have to close your case. And then I send them a final warning, which is, hey, we really mean it this time. If you don't get us the stuff, we're going to close your case, and there's nothing we can do to help you. And then if they still don't respond, then I send them the final letter, which is, your case is now closed. We don't consider you a client anymore. If you ever get the information, call us, and we'll let you know what we can do to help at that time. Otherwise, you're on your own. The closing letter is a very important part of the process. It hardly ever gets that far with me, because I pester the clients and I make sure they understand the gravity of the situation. But I can't say that I haven't had clients that I haven't had any choice but to bail before, what hits the fan. If they're not giving you information, they're about to get levied, they're about to have their bank account wipe out, and you've stressed to them the importance of this situation, and you've called them 100 times, and you've documented everything you've done. You don't want to be around when things go bad, because then they'll inevitably blame it on you. So there always comes a point where you have to close the case. So this is what I use for my information request from clients, from individual clients. When I'm requesting financials and I need to do a 433A, this is the letter I send them. Okay, for businesses, this is basically mirrors the language on the 433A. It's the information that the IRS says you have to attach. For businesses, the list is much shorter. Now, I don't always send everybody the exact same letter. Sometimes I'll tailor it to them. Like if I know that they have 4 bank accounts, I'll say, oh, make sure you give me all your bank accounts, and make sure you give me information about this house and that house. Incorporate whatever you know about them, so that way it doesn't seem so boilerplate and so, cookie cutter. Clients like to know that they're getting personalized and individual attention, and that means, not always doing everything the exact same way every time. You should have kind of a system in place, but it doesn't have to be identical every time. You need to adapt as needed. Now, one of the most important letters you're going to send in the case is a closing letter. You have to be disciplined in that every client should ultimately get a closing letter. Otherwise, from a malpractice point of view, first of all, it's best practices. The client should understand when you consider that you're done with their case and that there's nothing else that you're obligated to do for them. Also, your malpractice insurance company more than likely requires you to do it, because if you're not sending closing letters and a client hires you and you think you're done with the case and you've moved on with your life, and then 2 years later they get levied, and they might come back and blame you, say, well, I thought you were looking out for me, I thought you were taking care of it, you're my lawyer, or you're my representative or my CPA, what happened? And if you don't have that closing letter to point back to, look, I sent you a letter and I told you we're done, then you're kind of leaving yourself out in the wind. Now, I have two different versions of the closing letter. I have, first and foremost, a successful close. When I've won the case, I send them a letter. Congratulations, we finally finished your case. Here's what you need to do next. Here's what you need to look out for. I send the closing letter that explains the services I rendered. I give them a statement that says we consider that we're completed with these services. Here are things that you need to do next. Like with an offer, you have to make sure you file on time going forward for the next 5 years. Don't accrue any new balances. Make your payment by this date, or if you're in an installment agreement, you give them the instructions. Use it as an opportunity to thank them for their business and ask them for a review. And then include any documentation from the government that shows that the case has all officially been closed. The final letter, I always try to make sure every successful close has a final letter. Congratulations, your installment agreement has been approved. Congratulations, we've accepted your offer. Congratulations, whatever the case may be. You include a copy of the letter. Here's the letter from the IRS. Therefore, the case is closed. Send it to them, document it, ask for a review. This is what the letter looks like. Okay, so here it is, all the different paragraphs. Feel free to look at it in as much detail as you want. You can copy it if you like. I don't mind. Okay, there's also unsuccessful closes, which also require a letter to be sent. There are many different reasons why you might have an unsuccessful close. The IRS denied the resolution, although usually I don't remember any time I've sent an unsuccessful close on the grounds that we lost their case, because usually I have a backup plan. If we lose the offer, we'll get an installment agreement, or we'll do this, or we'll do that. So there's almost always some good news to report, sometimes not. Sometimes you might lose all the way around. Hopefully you're doing a good job at screening clients and not making promises you can't keep. And if you're not making promises you can't keep, then you shouldn't have a problem with losing cases. Usually when I have an unsuccessful close, it's because of one of the client things. Either they failed to give me documentation, they didn't pay their bill, they fired us or hired somebody else, or they've just been flat out unresponsive, and I've been needing not only information, I need a call with them, I need to talk to them, they don't return my calls. It's still important to send closing letters to unsuccessful closes. In fact, it's even more important because they need to be put on notice that you are no longer working on their case, so that way you are not responsible for the bad things that are about to happen because they didn't cooperate with you or they didn't pay your bill. So here's the language from the unsuccessful close. Notice it's much shorter. There's a lot less for me to talk about. Our office prides itself on performing first-rate services. Unfortunately, you didn't pay your bill. Therefore, we don't have any other choice but to close your case. We regret that it's come to this. That's basically the gist of it. You send it, and always, always, always when you send closing letters or you send really important letters, you not only send them certified, but you also send them standard. It's another best practices a lot of people don't keep in mind, is that when you send somebody a certified letter, if they don't sign for it, they never get it. The letter will get sent back. So best practices I've learned as an attorney, if you send somebody a certified letter, always send 2 copies, one certified and one standard, and note that. Because even if they're not home to sign for the certified letter, they presumably have received the non-certified letter in their mailbox. Don't do one or another. Always do both if you're going to send certified. So next we're going to be talking about how to structure your fees and how to get paid. So in general, when it comes to structuring fees, there is no one-size-fits-all approach. How much you charge and how you bill the client really depends on a variety of factors. I like The reason I like the three-stage approach and the selling approach is you get to use the analysis to your advantage. You get to find out so much about your client when you do the analysis. Not only do you see all their earning history, how much money they've made over the years, and also, what they're accustomed to. Some people who have made a lot of money, they're expecting to pay a lot more. They're used to dealing in bigger numbers. You also get to find out exactly how much money they have, how much they make, how much their bills are, and how much really it means to them. The key is to maximizing your profitability is to bill based on value. Use the analysis. Try to avoid underpricing your service. Also avoid overpricing it. I'm not advocating for gouging people. That's not what I'm saying. But just because you're doing the same amount of work for two different people doesn't mean it has to be the same price. The same service should not be a fixed fee. You need to figure out how much value are you providing to the client and how much should they pay for it. And as long as they feel like they're getting their money's worth, and as long as you're delivering on your promises, it's okay to charge a lot of money for some things. I've done offers and compromise for $5,000, and I've also done them for $25,000. And the difference between the $5,000 and the $25,000 is not entirely due to how much time it's going to take. Yeah, the $25,000 case is bigger. There's more at stake. It was a lot more complicated. It did take a lot more time, but not 5 times as much time. It's not directly tied to the time spent. It's just that I knew to that guy, $25,000 would be a bargain for what I was doing. And there was lots of work to do. You can't charge unconscionable fees. Again, don't try to skin people. Don't gouge them, but it's a range. I could have made money at $10,000 or I could have made money at $25,000. You get what you can as long as you're being fair and upfront and honest with people. Now, your average resolution case start to finish should be between $5,000 and $10,000 all in, for the entire case. That averages out. Some clients, might only need an analysis. You charge them $500 or $1,000. You do an analysis, and they don't really need any help. They just need a push in the right direction and explain things. Some clients might be a lot more. Depends as you're in the business more and as you develop a reputation, you'll start to attract bigger clients. I've had some clients pay me hundreds of thousands of dollars for their case. But then again, their cases sometimes go on for years, and there's hundreds of thousands of dollars in value that I've delivered to those cases. Now, those are the exception. The norm is your average resolution case, your average collection case should be in the $5,000 to $10,000 range, start to finish, including the analysis, the tax prep, and the resolution. Now, there's 3 different structures you can use. You can use a flat fee, then there's an hourly, then there's a contingent fee. You can use a combination of them. You can do blended fee agreements. You can use a flat fee for some stages and an hourly or a contingent fee for other stages of the case. There's a number of different ways you can mix and match these. When you're doing a flat fee case, it's a one-time fee for the services. Now, it doesn't have to be all paid at once. Of course, it could be a one-time fee paid in multiple installments. Usually use those not necessarily for simpler cases, but for more predictable cases. If you have an idea of what's going to go in the case, if somebody owes a whole lot of money and they need an offer in compromise, you should always try to do it for a flat fee because it only takes so many hours to do an offer. You should be able to get that case done. Usually your average offer should be maybe 10 hours start to finish for the resolution phase. But, just because it's 10 hours of work doesn't mean you shouldn't charge $15,000 or $20,000. For some people, that's a great value for them. If they owe a lot, they can afford to pay a lot, you deliver the results that you promise, and you do what you promise to do, there's nothing wrong with charging a lot of money. You should do it for a flat fee, and because that's how you're going to make the most. Hourly fees, sometimes the way that works is the client will give you a retainer up front, and then you work that off based on what your hourly rate is for your firm. Once the retainer runs out, you send them a bill every month. I would use these for more complex and or unpredictable cases. Like if you have a field audit with a revenue agent, there's no telling how much time will go in that case. And if you do it for a flat fee, you're just guessing and taking a huge gamble on whether or not you're going to make money or lose money on that deal. I've had audits, field audits, go for $5,000 start to finish in time and hourly time. I've had them go for $250,000. And it's not always that obvious when a client comes up front how much time and effort you're going to send into the case. So to mitigate your risk for those kinds of audits, I recommend doing an hourly fee. Same with complex collection cases. If you got a revenue officer, my rule of thumb is if we have a revenue officer or a revenue agent's a field auditor, a revenue officer is a field collector. If I have any of those two on the case, I'm going hourly, because that way I'm not taking a risk that I end up, spending 3 or 4 times as much time that, I get paid for on the case. Because with a revenue agent or a revenue officer, it's really up to them how much time you spend on the case, because they have the power between them and the clients. It's really completely out of your hands to a large part, not entirely out of your hands, but a large part out of your hands, how much is going to go into the case. And then there's also contingent-based fees. However, what that is what it sounds like. It's a fee based on success. They're only allowed in limited circumstances under Circular 230, which is, the ethics rules that govern practicing before the IRS. There's an absolute bar on contingent fees except for 3 circumstances. One is in connection with an audit or examination or a refund claim related to an audit. The second one is in connection with penalty and interest waiver requests. If you're requesting them to waive penalties or interest, you can charge a percentage of the amount. I've made a lot of money on some penalty abatement cases because there was, hundreds of thousands in penalties, and I'll do it on a contingent fee. You can only make so much on an hourly basis or on a flat fee basis. You can only charge so much, because with a flat fee, they might lose. They won't agree to a $30,000 fee necessarily. Or with an hourly fee, you might only get $4,000 or $5,000 worth of time into a case, but because you did a phenomenal job, they saved $300,000. Well, it wouldn't be out of line for you to charge them a contingent fee based on the success you get, and you just charge a percentage of what you save. And then the third exception in which contingent fees are allowed is in connection with litigation matters. If you end up in tax court, or if you end up fighting the IRS in federal district court, or if you're in court at all on a matter, then you're probably an attorney, and hopefully you are, and you are allowed to charge a contingent fee on those types of cases. But all other cases, for example, for doing an offer in compromise, you can't charge a contingent fee. You can't charge more if you win than if you lose. It's just not allowed under the rules. But sometimes, in appropriate cases, you could potentially hit a home run. If the right client comes in and you quote them a contingent fee, you could make hundreds of thousands of dollars for not that much work while still delivering a whole lot of value to your client. So again, when you're doing in flat fee, you're going to want to sell the case in stages most of the time. You use the step-by-step analysis, tax prep, resolution. Those are the 3 stages. You should have a separate fee agreement for each one. You use the a la carte approach. Okay, only quote one step at a time. Try to avoid, clients always ask when they're coming in, well, we're going to do an analysis first, and then how much is that going to cost? And how much is that going to cost? And then you tell them, well, after the analysis, we're going to do tax prep. After the tax prep, we're going to do resolution. And the first question is, oh, so the analysis is $1,000. How much is it going to cost when we come back? I always say I have no idea. Look, I don't know. I don't even know what kind of help you qualify for. I don't know what it is I can do for you. What I do know is that when you hire me for the analysis, you're not obligated to do anything else. And when you come in, what you're paying me for, you're going to get value, because I'm going to give you back a game plan. I'll give you detailed step-by-step instructions on what you need to do next. And at that time, I'll be able to tell you how much it costs. It wouldn't be fair. I don't know how much it's going to cost because I don't know what it is yet. But when you come back, and if you think it's too much, then you're welcome to go somewhere else and have somebody else finish the case. You will have a recommendation and a step-by-step game plan, or you can do it yourself. It's not that hard. It's not rocket science. The most valuable thing you can do is hire me to use my judgment and make a recommendation. And then from there, you don't have to spend another dime, because at the end of the day, this stuff ain't that hard. You seem like a smart guy. I'll give you the forms and the instructions. And of course, that's the pitch. So you avoid telling them, yeah, this is going to be 10,000 by the time you're done. Now, you're not lying to them. Everything I say is true. It's not rocket science. If you carefully read the form and the instructions, you could probably do it yourself. There is value in paying me $1,000 just to tell you what to do. But I can tell you that maybe 5% of the people actually take me up on that offer of doing it themselves. They say, no, when they come back to do the analysis, here's what you need to do. You can do an offer and compromise. Here's why you qualify. I'm always transparent. I don't say, well, I know how to do it, and if you hire me, I'll do it for you. No, here's what we're going to do. Here's the steps. Here's the forms we're going to fill out. Here's the instructions. To be honest with you, it's not that complicated. You could probably do it yourself, but if you want me to do it, it's going to cost you 10 grand. I can tell you 95 times out of 100, they'll say, no, I'd rather pay you to do it right. So, there's a way to do it where you're not being like coy, you're not withholding information, but you're also not, because if you tell them, oh yeah, it's 1,000 for the analysis, and then if you come back and if you do an offer and compromise, that's probably going to be 5,000 more. Well, they start to add up the numbers and they start to get reservations. You just focus on what step you're on, get them to the next step. They come in, quote them $1,000 for the analysis, figure out what they owe, give them the game plan. And then if they have returns to do, you should charge, I charge between $500 and $750 for each 1040. That doesn't include any accounting. That's assuming that, they can fill out organizers or they have W-2s. If there's any accounting work that needs to be done for me to get them a profit and loss, then that's billed by the hour. And then a resolution on average, now offer and compromise is more, installment agreement is less, but I think on average a resolution is about $5,000. Sometimes if somebody wants me to negotiate an installment agreement, I charge as little as $1,500 if it's a streamlined installment agreement. $1,500 still isn't bad for what is essentially one phone call and, a little bit of follow-up. Or sometimes I charge as much as $5,000 or $10,000 to set up an installment agreement. It really depends on the complexity of the situation and how much they owe. But I'd say the average for a resolution case is $5,000. That's just for the last phase of the case. Now, when it comes to hourly fees, again, you don't have to only go one way or another. You can mix and match. So you can start a case as a flat fee. Well, let me do an analysis for $1,000, and let me do your tax returns. And then at the end, you say, well, this resolution is kind of complicated. It wouldn't be fair. I can't really predict how much it's going to cost. It's best that you pay me hourly. Or instead of doing it that way, you can just start hourly from the very beginning and just say, look, I'm just going to do your case by the hour. We'll go right into the resolution and we'll skip this and that. However you do it's fine. You take it on a case by case, but just make sure you get an appropriate retainer or an engagement fee up front. Don't ask for somebody for $1,000 up front and then have $5,000 in time in on the first 2 months, because then they'll start to say, well, wait a minute. They'll feel like they were tricked. You bait and switch with a little amount. If there's a lot of work to do up front, get a lot of money up front. Because if you think you're doing better by just getting a little bit up front and get your foot in the door, you're just asking for complaints later. Be up front with people. Look, I don't know how much it's going to cost, but it could be a lot. I know I got a lot of work to get started right away. I need a $10,000 retainer to get started. I used to be, when I was first starting out, I'd say, wow, let me ask for less and get them hired. But, I started to find out later that you don't get as much pushback as you would think. Just look somebody in the eyes, tell them like it is. You have a serious problem. This ain't going to be cheap. I need 10 grand to get started. And if you do it right and you're pitching the appropriate client and you're doing it in the appropriate circumstance, they should most of the times bite. I never go under $3,000 for a retainer fee. I don't, even though sometimes the engagement fee might be $10,000 or $3,000, they don't necessarily have to pay it all at once at the first meeting, but I put it in the retainer so they understand that there's absolutely no chance that their case will cost less than that. And try, if you can, giving them a prediction of what the total fees are in the case. Remember why you're quoting them an hourly fee to begin with. It's because you really have no idea how much it's going to cost. And don't be afraid to tell them that. Because sometimes the biggest mistake I've made in my practice is I underestimate how much work something's going to be. And I read an article that says it's actually human nature. When you ask somebody, how long does it take you to do this? They usually underestimate by half. So when you're quoting somebody a fee, oh, I think I can get that done in 10 hours, it's probably at least 20 hours. You just don't know it. And that's if everything goes as planned. That's just human nature. You already start off at half off. Now, if something goes haywire, it could be 30, 40 hours. And now you tell the client it was a $5,000 job, turns out to be a $20,000 job. They're not happy. Now, that same client might have been just fine paying $20,000, and it's your fault for setting up low expectations by quoting a low fee. So when I'm quoting somebody hourly, I just tell them, look, I really don't know. Hopefully, I can get it all wrapped up. You don't have to spend a dime more than the initial payment. But I don't know. It could go deep. It could end up being a lot of money. And I'm not in a position to predict it at this time. And people usually appreciate that. And they're usually okay with that. One thing you should remember when you're quoting a client is that most of the times they've never hired an attorney before. They've never been in this position before. They're there to follow your lead. A lot of times you might second guess yourself and say, oh, what is common practice? Or they might push back, or they might think it's done this way. It's done however you say it's done. Because chances are you're the only one who's ever done this before. And so whatever you think, don't second guess it, and just, again, have confidence. Now, again, back to contingent fees. They are allowed in limited circumstances, and they can be very powerful. Circ 230 prevents them, except in the 3 circumstances I told you. However, there was recently a court case called Ridgely versus Liu that basically said Congress does not have the power to regulate tax preparation. Circular 230 is a body of laws you guys should all be familiar with. This is the body of rules that applies to practicing before the IRS. And it's got all kind of ethics rules, and that's where it says you can't charge contingent fees. However, courts have determined that preparing tax returns and preparing refund claims do not qualify as practicing before the IRS. Therefore, the Circular 230 rules do not apply. So you might be allowed to do a tax return based on a contingent fee or a percentage of the refund. Circular 230 does not prohibit that. However, most states, if you're a CPA, most states will have a rule that prohibits that independently from Circ 230. So, just because Circ 230 doesn't apply doesn't mean, you're allowed to do something. But, if it's not a refund claim and you're doing a contingent fee, a lot of times we do what's called the reverse contingent fee. With a standard contingent fee, at the end of the day, the client's going to get all this money and you get to take your share right off the top. With a reverse contingent fee, at the end of the day, the client's going to have to pay. And then you got to get your share. So with a reverse contingent, you're not guaranteed to get paid. Just because you save them half doesn't mean that they're going to voluntarily pay you your share. You don't get to withhold it from any payment. So what I do in those cases, I always get a refundable deposit up front that's reasonable. If I'm doing a penalty abatement and I say, hey, look, if I win your case, you're going to owe me $20,000 based on the contingent fee we agree. If I lose your case, you're going to owe me $0. How about you give me $10,000 now? And I'll work the case, and at the end, we'll figure out what the fee is. Either I'll give you some or all of your money back, or you'll pay me some or all, or more additional money, and then we settle up at the end. It's always important. Otherwise, you're going to have a hard time getting paid on contingent fees. So here are some factors to consider. Minimum fee is how much work something is going to require, and you go up for there. Always figure out what you think is going to go into a case time-wise, and do not ever quote less than that unless you're choosing to doing pro bono work. There's nothing wrong with charity. I highly recommend it, but do it voluntarily, not by accident. If you want to give something for free, then do it for free. But your retainer on an hourly case, your minimum fee on a flat case should always be the bare minimum of what you think the hours will be on the case, and then try to get more than that if possible. Think about how important it is to the client, what kind of results you can deliver, how complicated the case is. Most importantly, how much is it worth to the client? Whatever you're going to do, what is the value to them? How much can they afford to pay? And that's how much you should charge them. So that takes us to our third and final polling question. So that's it for today's content. Thank you all for joining me today. Hopefully you found this session informative and you learned something about how to actually do a tax resolution case. Please don't forget that if you have any questions about this session or about anything else, please don't hesitate to reach out to me anytime. You can email me or call me at the number at your screen. That is a hotline specifically for accountants and attorneys who want to call me with questions. Please don't be too shy to use it. Thanks again for joining us.